The closing disclosure is one of the most important documents within a loan packet. You will always want to pull this out first and hand it to the borrower so that they are able to check their final numbers to make sure that it is correct before they begin signing the entire packet. As stated here, the Alta Statement is a repetitive document to the closing disclosure. It's only going to display the major loan amounts, fees, and costs associated with the entire loan. You do not have to present this document first along with the closing disclosure. You can leave it in the packet where it is and just let the borrower know that it is a repetitive document to the closing disclosure. The itemization fees document is another repetitive document to the closing disclosure. This document in particular is only going to display fees associated with the title company, any property taxes that will be due, and any insurance payments. The note is the borrower's promise to pay the loan amount. On this document, you will find the loan amount, the interest rate, the first payment due date, as well as the payment amount. The deed of trust and mortgage documents are a very essential part of the loan packet. Depending on your state's foreclosure laws, your packet will either include the deed of trust or the mortgage. Keep in mind that these two documents require your notarization each and every time you're performing a loan signing. Riders go hand in hand with the deed of trust and mortgage. Riders are already within those two documents originally, but sometimes they may be separated because these riders are specific to any special needs or special terms of the property, such as if the property is located in a development, or if it is an investment property, or if it is a second home that a purchaser may not be living in. The notice of right to cancel is another essential document to the loan signing packet. This document gives the borrower 3 days in order to cancel the loan. Understand that if this document is missed or completed incorrectly, that it can stop the funding of the loan. These applications listed here will be included in your loan packet. These applications will be pre-filled because they were filled out prior to the loan being approved. The borrowers do not need to fill out any information. Rather, they need to look over the information to make sure that it is correct and then sign. Errors and omissions and power of attorney are also two documents that go hand in hand. Errors and omissions is going to come in either compliance agreement form or it's going to actually be titled errors and omission. Both of these documents are the same. They're going to give the borrower either 15 or 30 days in order to comply with the lender to make any changes within the documents. All power of attorney forms within the loan packet are pretty much going to say the same thing. The borrower has to give the lender power of attorney in order to correct any clerical errors that may have arisen within the loan documents. So an escrow account is essentially an account that the lender is in charge of. It's going to hold funds that will pay for insurance premiums and property taxes. If a borrower is choosing the option to have an escrow account, within the loan packet, you will see a document called Agreement to Pay Escrow. All that is saying is that they will agree to pay their escrow account. You will also see an escrow account disclosure. What this is going to detail is information about their first payment, as well as a 12-month snapshot of their escrow account. You will see this document if a borrower decides not to have an escrow account. The lender just needs them to sign off on that fact. Each loan packet that you receive, you will come across some form of an insurance document. Whether your state gives them a notice to let them know they're able to choose their own insurance, they're going to give them insurance requirements for their policies. They're going to also include any type of flood hazard determination or confirmation of flood insurance, but that all depends on the area that the home is built in. With this document, the borrower has to sign off on receiving specific disclosures or loan documents. No same authorization notice will be exact. It depends on the lender and title company which documents they will include in this letter. You are guaranteed to see this document within every loan packet that you receive. Some are going to be a little bit more detailed than others. It just depends on if the borrower has an escrow account. But it is going to detail the first payment and break down each amount that goes into the payment amount. You can also find the loan amount and the interest rate on this document as well. So, in this part of the video, we're going to talk about affidavits. I'm not going to go over any specific affidavits because every state is different, every title company is different as well. Each lender will require you to fill out different types of affidavits depending on the type of property it is. But you can guarantee that you will see one named affidavit of occupancy, and this is going to confirm how the property is being lived in, whether if it's a primary residence, second home. But with affidavits, what's happening in these documents is the borrower is swearing to the best of their knowledge that the information is correct. Some of them the borrower will have to physically fill in, while others they just have to read over the information and make sure that they agree and confirm to the information within that document. Also, understand that affidavits, being as though the borrower has to confirm that the information is true to the best of their knowledge, each of these are going to have to be notarized, and these would be considered jurats. Just like affidavits, I won't go over any specific hold harmless documents because they all can vary. But as long as you understand what hold harmless means, you will be able to pretty much summarize any of these documents that you come across. Most of them will detail in the title what the lender and title company will be held harmless of, but you can guarantee that within that document, it will explain that they can't be held harmless for things like increased taxes or property damages and sometimes even attorney fees. With the times that we are in, I can definitely guarantee you that one that will be consistent, even though it may come in different forms, is a COVID-19 hold harmless document. And that's actually going to have the borrower and the lender being held harmless if the country happens to shut down due to COVID-19. Whenever you see the words gap, it is referring to the time between closing the real estate transaction and actually recording the instruments like the deed and the mortgage. So, what the title company would do is they would issue title insurance so they can fund the loan prior to recording, just in case if during the title rundown anything comes back with information that may be able to stop that loan funding process. So, when it comes to tax documents, I can guarantee you will always see these forms within a loan packet. The lender is always going to include a tax consent document, which gives the lender permission to use the borrower's tax information. As far as the documents that they use to request those tax returns, in 2021, the IRS did update the documents, so most likely you will see both versions within the packet. You shouldn't be seeing that too much in the future, but just in case you do, just make sure that you have the borrower sign all of the copies that are within the loan packet. Now, with these documents, you should not be filling in any information. The lender is always going to make sure that those documents are pre-filled. This tax authorization notice you won't see too often depending on what state you live in, but this document gives the lender access to tax records on the property. Documents referencing credit score you are guaranteed to see within a loan packet. The two different documents you will see are the Equal Credit Opportunity and the FACT Act, which basically lets the borrower know any delinquent payments will be reported to the credit bureau. Depending on what state you live in, the lender will include the actual credit check or scores. You can guarantee there are going to be at least 2 to 3 privacy notices within a loan packet. Each of them are pretty much going to say the same thing. One may be geared towards the lender, the other may be geared towards both the lender and the title company, and it just basically goes over information that they will share with any other companies or any affiliated companies or anyone that may be purchasing the loan, depending on what type of loan it is. The amortization schedule is a pretty simple document. It's going to be about 3 to 7 pages long, just filled with a bunch of numbers. It's going to go over the first payment all the way up until the last payment throughout the full term of the loan. The line of credit to close or the payoff letter is a letter sent on the borrower's behalf to the payoff department of their old loan. This is only in the case of a refinance. What it's doing is it's giving the old lender basically a heads up that they are refinancing with another company and they will be closing or paying off their loan amount. All right, so we are almost through with this segment. I'm going to go over the identification forms within the loan packet. So when it comes to identifying a borrower, you will see at least 3 out of the 4 listed here in each and every loan packet. The signature name affidavit goes over the name variations for the signer that may have been found during a credit check. These documents can be separated. One will say name affidavit and the other one will say signature name affidavit. Just understand that they're both basically saying the same thing. The ID verification form is the one document you may not see often depending on what state you live in, but it is a repetitive document to the Patriot Act form. The difference is the borrower signs the ID verification form and not the Patriot Act form. The demographic information form is always going to be pre-filled. The borrower filled out the information prior to receiving the loan. They can opt out of giving this information as well.